Another down day for the SPY with actually a bearish leaning indecision, which is very interesting. And we're going to go into those shorter time frames as we do still see some reversal signals, but we might want to be open for some kind of double dip. But there is something we need to talk about, and that is actually the green square that you got on the right side of your screen. And the green square is just a little square that I have inside the weekly expected moves. You can see it's taking up most of it. And that's how much implied volatility we actually coming in for tomorrow. So yesterday, we were saying, hey, it looks like going into the next day, we do have the most implied volatility I believe I've ever seen in one day on this channel. But now we have beat that the next day with seeing almost 50% for IWM, 44% for the Qs, and 40% for the SPY. So tomorrow will be a wild day. Does that mean we are going to see that distribute to the downside? Are we going to see that completely pump to the sky? Or are we going to keep chopping around in these areas? So let's get into it. Well, the first thing we want to point out is the daily expected move, right? The daily expected move is 588.77 to the upside. We see 564.95 to the downside. Look how massive that really is. So there's a lot of implied volatility for tomorrow. So someone's expecting something, or at least the market is. And maybe if it's a dud, we don't see much, but we can get some rip around behavior here. Now, how this might play out is really looking at the shorter time frames. If you see the movement of the SPY right now, you can see that if this 2-hour was actually able to cross up, that might only take like 2 bars. And if that would continue to the upside, a level to pay attention to would still be that 597.88 to the upside. But if we curl up this 2-hour, it's hard to say that that's going to go down again for the next dip. I think that for the most part, the 30-minute chart will be your friend here, even though the 2-hour chart is the one that shows the great divergence on your RSI, not on the MACD at the same time. So even though it seems like a double dip for the 2-hour would be kind of hard to imagine, we need to be aware of it because we might need to see it on both indicators at the same time. That means the 2-hour is still open to a double dip, which would considering that type of price action, that would be more rip around kind of behavior for the next few days. So we should be saying that we could see that. We are down by a monthly expected move. So as far as is this going to crash down, that would be the way less probable thing. But as this implied volatility is ticking up, we are in a negative trend and there is a lot of bearish sentiment out there. It can happen. These are times where people can hit that sell button really, really fast. So we need to be paying attention to the 30-minute chart. And the 30-minute chart is going to be important. It's going to be able to tell us when the risk is to the downside. So if the risk is to the downside, then this 30-minute is easily going to cross, and then you could hold up at lower levels. If we want to make some kind of divergence or something like that, we could be open to it. But the post market is showing some upside at this moment. And you do notice we are holding the original divergence points right in here for the SPY. This means there could be an attempted bottom here. Even with this would be seen more as a shakeout, but the monthly expected moves are suggesting something here, and that is that if I take a short position right here, the reward might only be this, but if I take a short position, the risk is that by the end of March, we end up at higher levels. And as we're at the bottom side of this monthly expected move, we have to realize it's very early on in the month. So be open to this turning around, but also I would be open to trading like water because it could continue to be complex until we see a resolution here, possibly to the upside, because that's what the signals seem to be leaning towards. And even if you don't believe that and you're not seeing the best behavior on the MACD, you're really not. You're not getting a lot of hints from your MACD, but your RSI for the Qs is holding all the divergence points from this low. We have held this tapering the entire time. Always open to another dip down, right? The Patreon video we put out towards the end of the day today, just suggesting around these areas, we were starting to put that out. We said, hey, if we get that run up, just make sure we're paying attention to that 5-day. And if we reject off of it, we did reject off of it, but it wasn't able to curl down a 15-minute chart just yet. So if I'm going to be early with it, I don't care if this thing gaps up or see some kind of random good news because Trump's supposed to talk tonight. Okay, maybe I was looking for more likely the 15-minute divergence. So that's what we were talking about to be aware of. But as the Qs do have a bunch of 30-minute signals for this RSI holding, this can resolve itself to the upside, even with some ugly stuff at the end of the day. People may be taking profit or eager to not hold things overnight, possibly for day traders. So the levels to pay attention to right now, this is still curled up. So weirdly enough, I know that the last bar of the day is ugly, but your indicator is suggesting, and the 15-minute not rolling is telling us, we still need to be paying attention to 50808. That would be a great level to watch. I think if you want this to build back based on just the 30-minute, I would like to blow past that and get to 519 sometime in the next 2 trading sessions. So whether that is some kind of structure like this to head to the upside, that would be the best way to build back over time without having to see some kind of V shape. Now the downside move, in case we do get that 15-minute to cross down right away in the morning, well, we're going to be paying attention to 483.02, which will be really, really close to the monthly expected move. And once the Qs get down to here, if they do, then you're kind of going opening short positions here might not be the best decision, because you have this about this much amount of reward while you have this much amount of risk. So you can kind of see that from the Qs at this point. This is rolling over some bigger time frames. I mean, monthly charts are starting to look really ugly. So because this is happening in the early parts of the month, though, I would be open to these reversal signals playing out to the upside. And you see this from the 2-hour for the Qs, rather flat actually on the MACD, which would hold some more weight to, we can see a little bit stronger move maybe to that 518, and maybe we blow past this, we go to that 518, we use the topside daily expected move as support, and then we see that thing get to a weekly expected move towards Thursday and Friday. I think that would be super interesting to see if that's able to take place, if it's going to do so. These are just things to be aware of, because the daily chart is starting to look like, hey, it's down, down, down for the Qs. We are looking for a possible lower high as the MACD stands right now. So we'll see what comes from this in the future, but we do see that 200 there. We should be open to big buyers trying to make a decision around here if maybe some of their doubts with the market can be eased from Trump tonight. And IWM, I did erase our 2 lines because we just showed the weekly expected moves for this. I think it's perfectly fine for you guys to see this for the small caps, but just so you notice the daily chart just facing directly down, and we haven't seen any kind of reaction here. I mean, we were aware that this could be some kind of downward move, and we even drew down in these areas, and now that weekly expected move is actually coming in at a great point. The lows back in September of 2024, so these lows back in 2024 are fantastic because you've seen those levels kind of hold up pretty well, right? We saw them hold as resistance, resistance, resistance. We break through that with a gap up and go. We lose it for a moment, but the buyers step back in. We see another gap above it right there. So we know this level is very, very important. And notice where the IWM weekly expected move, and if you're part of Patreon, you want to get on that right now. We have monthly expected moves, and you're seeing a lot of tags of monthly expected moves. It is a great time as a trader to have monthly expected moves. But is this daily chart going to curl up? The 2-hour is suggesting that the divergence is complex but holding at this point, and it's not holding on the MACD though. So this would tell us that IWM is also, IWM and the SPY are mostly leaning towards that double dip down into these type of areas for another test. So you have pretty much two of the main ones we're looking at today, 2 of the indices we're looking at, SPY and IWM, are suggesting more sideways behavior, while the Qs are saying we could possibly see a rip here and start to build back over time. So mixed bag, so we'll pay attention to both sides and make sure to have a plan going into this. But as we are outside of a weekly expected move, it is very likely by Friday to close back in these areas. Even if we do fool around in here for a while, by Friday, you could see that thing land to the upside, and maybe after those options expire, we start to turn this thing around. Nvidia is one that I did want to point out because we talked about the possibility for double bottom, and we said Nvidia needs to start seeing green right now, as in today, and Nvidia is one of the green stocks. This is what you wanted to see from Nvidia. You want to see Nvidia holding the divergence points. You see that on the MACD and the RSI at the same time. The RSI is a little hard to see, but I want to prove it to you. You see that that is upward while the price action is coming down. So that means if we see those big buys step in and this daily MACD is able to cross up, you're going to be going positive, and something very likely is we see some kind of V-type move to here, maybe even break above that a little bit, then get some kind of retest, almost like a cup and handle. Very interesting things can happen if Nvidia curls up this daily chart. So let's look at a 2-hour. In the 2-hour, you're just going to notice, and this is very key, and the reason we're talking about this is because Nvidia weekly expected move is right here. So you're at the weekly expected move, but have we made the reversal signal yet? Not necessarily. This, like, you know, things do reverse without 2-hour signals, but they're going to be very sporadic. And so since we're seeing that from the Qs, maybe we can take that into consideration. Maybe we need to do some analysis over in some ETFs that track a lot of the semiconductor market. So paying attention to this alone, though, we would easily say if that 2-hour curls up, hey, we can see a positive move. And if we take back the 5, that's going to be a big deal if we can keep that. Because if we just do this and we lose the 5 again and we curl back down on this MACD, it's very likely we're making some sort of divergence to really fake people out, make them even more bearish, even though we have serious bearish sentiment out there right now. So Nvidia is suggesting that it could need more time before it curls up that daily chart, and we should be aware of that at this point, because a lot of the MACDs for the 2-hour, for the Qs, for the SPY are far away from that center line. So let's just be open to and have a plan for if this thing starts to turn back down in the downward direction to make some kind of strong 2-hour base. Because at the moment, you only have 30-minute bases. Now, they are prolonged moves, and these are trying to be a base in some way, meaning it's trying to take back that 5-day moving average, but you just see how deep these MACDs are, even though the RSI is showing it. So these are very interesting moves, but if the 30-minute curls down, there's no way that 2 hours curling up. But another thing to just be aware of is even if the 30-minute does curl down, it can curl up that 2-hour and curl down again. It's a wild thing, but because these bottoms are being so complex in the indices, we have to be open to complex bottoms for Nvidia as well. So the main trigger here to see potential for new all-time highs for Nvidia is if a daily chart can cross to the upside and confirm these divergences. Now I'm going to show you one that actually has both, and we did draw up this little trend line just to give you a little idea of where we maybe are going to if we're going to attempt to fill this gap. We still could go fill that gap, but I wanted to point out Tesla because Tesla is negative. It's very likely to see a lower high, just so you are aware. But this is very interesting because there's a lot of things that are actually suggesting the daily chart could curl up, like say starting tomorrow. We do see the 2-hour chart. We see these confirmations of the 2-hour chart trying to just barely get above the 5, and then they give it up towards the end of the day. So something very interesting here is you're not only seeing those divergences because you get the little blip, because we get this little moment right here, you do see it on the MACD and you see it on the RSI at the same time. So this is something that I would be a little bit aware of. This can easily turn down to go fill that gap real quickly and then come back up. So it might be good to watch 30-minute charts and see that that divergence has proved. So now, as the buying did not show too much positivity, you can always fall through, fill that gap, and make a quick little thing right here. So we'll see if that's able to take place for Tesla, but Tesla looks like it may want to reverse around that daily chart in the next few days. Now, we did talk about how two indices were saying that a potential for more correction could be there. And so I wanted to talk about volatility. Volatility originally giving the signal saying, yes, we're going to try to go to all-time highs. Hey, it whips back around. Always be paying attention to risk, right? That's why we talk about both sides. Now you've seen this move, and it was a bigger one. Okay, it was a bigger one, but volatility overall ended the day up. The SPY ended the day down, so we haven't seen that 85% chance up day yet, and we do have one more trading session for that to take place, and that would be tomorrow. So you do have an 85% chance to see a green day tomorrow in the SPY, so I think that's very interesting. But the volatility index here is just overall saying, yeah, we could see a 2-hour upward move and then completely see that turn back around. Because we are so far away from the center line, we have to be aware that a lot of the time we see some other kind of curl up from volatility before it actually will drop. So I would be very open to a complex move here in some way. But if this thing can just start to collapse, if we can start to see this daily start to turn back down, that's where I would be a little bit more hopeful for the bulls to actually see some bigger prices for the SPY and the Qs. But I would just really be aware of this. You're not seeing much on the 30-minute. You're overall showing even this. If the 30-minute is above the 5 and can curl up, we could still see more downside early on tomorrow. So this just means you have to be very cautious with this market and understand, yes, this looks like we are forming a bottom, but this could continue to be complex. At this moment, it looks like we could have an attempt to bottom tomorrow, but if that's not going to be the full case, then we might see things rotate back down, and that is where we want to make sure to have a plan for managing our trades. So I got to get out of here. I got to go put up a little screen so no hail or something cracks my window. So I appreciate you guys watching this video. I mean, it looks like we could get a mixed bag of things, but what looks like to be the least probable thing at this moment is some kind of stock market crash. I mean, at this moment, that would be the least likely thing in my opinion, but that doesn't mean it doesn't have a percentage to it, right? There is still a chance of that, and that's why we're gonna watch these short time frames. And if we start to curl down and violate divergences, even on a 30-minute chart, I would be very cautious and make sure things are creating new divergences before I take my play to the upside, even if I'm outside of a monthly expected move, because this is where you can start to see some really, really crazy stuff. And you're noticing that as we get to that move, implied volatility is increasing. That means we could experience bigger drops, right? And if that keeps increasing, bigger drops below the monthly. So it's a time to be cautious. Thank you guys so much for watching this video. I hope you guys have all the luck in the world with your trades going on tomorrow. I will try to be live if we have power in the morning, but I do appreciate you being a part of this community. I appreciate you liking, subscribing. You guys are fantastic, and I hope you guys have a fantastic night. Peace out.